The data is officially in, and it's worse than even the most bearish housing market crash models predicted. The National Association of Realtors just closed the books on 2025, revealing a U.S. housing market that has effectively frozen solid. We aren't just looking at a slow year. It's been a historic downturn, with home sales volume hitting its lowest point for December ever. We are witnessing the total collapse of real estate liquidity and the American dream. But while the headlines focus on low volume, the real story is hidden in the housing market metrics, flashing red to start 2026. Redfin just reported that, outside of raw home sales, cancellation rates have exploded to the highest levels they've ever recorded. In December alone, over 40,000 U.S. home purchase agreements were terminated. That's 16.3% of the entire real estate market walking away after the contract was signed. What's even more alarming is how these housing market deals are collapsing. Buyers are now weaponizing the inspection contingency, using minor structural notes as a legal trapdoor to escape mortgage payments they realize they simply can't afford. It is a massive financial pivot disguised as a repair request, a legal loophole. With sales already plummeting and cancellations hitting record highs, the question is no longer whether the market is slowing. It's how far this fragile floor can fall before the entire system breaks. Today, we're going to look at these stats in depth to get a true sense of just how bad things are, despite what local values are telling you. Now, many people are going to argue that, sure, these stats are nice, but at the end of the day, it's the price that matters. And nobody, not even the most bearish analysts, is going to argue with that logic. According to Zillow, home values, as an average across the entire United States, are actually up 0.1% since last year. And despite a choppy, flat market over the last 16 months, most Americans, especially those living in the Midwest or Northeast, have yet to see any signs of cooling in the market. However, despite this towering bubble that has refused to budge on the national level, there are massive cracks appearing in the foundation. One of which is, of course, sales. As mentioned at the start of the video, the National Association of Realtors just reported the slowest year for sales since 1995. While that may appear to be a useless stat, when aligned with the current inventory situation, it's very clear that going forward, the housing market across the United States will face serious headwinds. 2026 is already not looking good either. Pending sales in December were at their lowest levels since records began. And keep this in mind, the Federal Reserve has lowered rates 7 times since August of 2024. That means the Fed is stimulating, yet buyer demand is still dropping. Last September, a typical 30-year mortgage rate was 7.1%. Today, it's 6.1%. And that goes to show that, despite these efforts, prices are simply too high. We can talk about rates all we want, but ultimately, to fix this market, we need a massive drop in values. Now, while overall prices have remained stubbornly resilient in many parts of the country, you need to understand that this isn't due to high demand. It's due to seller delusion. You see, in the existing home market, the houses most people buy that were built decades ago, that subsector is notorious for refusing to budge. We call this downward price firmness. Psychologically, it's nearly impossible for a typical homeowner to accept that their house is worth less today than it was in the summer of 2022. They are anchored to that peak price, and if they don't get it, they simply pull the listing and wait. But there is one group that cannot afford to wait: the home builders. Unlike your neighbor who is waiting for a unicorn buyer, home builders are massive, cold-blooded corporations. They have shareholders to answer to, quarterly earnings targets to hit, and massive debt loads to service. They don't have the luxury of waiting it out. If the market turns, builders will cut prices and stack incentives. They are the market makers. In overbuilt markets like Austin, Phoenix, and across Florida, we are seeing a massive disconnect. Brand new luxury homes are being priced below the outdated properties listed by delusional existing sellers. This is a massive red flag because eventually the existing market is forced to follow the builders down. If you want the ultimate proof that the housing market is broken, look at this chart from Club. It tracks the gross margin for D.R. Horton, the largest home builder in America. Gross margin is essentially profit expressed as a percentage of revenue. It tells us exactly how much meat is left on the bone for the builder after paying for land, labor, and materials. Look at the trend line. In the latest quarter, Q1 2026, D.R. Horton's margin dropped to 20.4%. Now, to the average person, that sounds fine, but looks at the historical context. The strong band, the blue band. These are the boom times when builders have all the pricing power. Then there's the normal band, where the market typically hovers. And finally, the red band, the weak band, or the danger zone. Notice the only other time margins stayed in that red weak zone. It was from 2007 to 2014, the heart of the great financial crisis. As of right now, D.R. Horton is clinging to the bottom of the normal band. But look at the trajectory. The line isn't just dipping, it's plummeting toward that red zone. D.R. Horton's own leadership admitted in their January 2026 call that once you strip away one-time warranty recoveries, their true margin was actually 20%. Even worse, they've explicitly warned that because they are having to offer more incentives to move houses, they expect margins to be lower in the next quarter. This is a multi-billion-dollar company that exists solely to maximize profits. If they could sell these homes for more, they would. But they can't. They are being forced to sacrifice their own profits just to find a buyer. You can't hide the truth in these corporate filings. While the national estimates might make it look like everything is fine, the biggest builder in America is waving a giant red flag. They are screaming, "We are cutting prices," and it's still not enough. When builders lose their pricing power, the rest of the housing market is usually only 6 to 12 months behind. If you're waiting for a sign that the fundamentals have shifted, this is it. We are heading straight back into 2008 territory. You can see this housing market crash unfolding in slow motion when you compare new home sales and existing home sales and how they've completely split apart. For 20 years, new and existing home sales moved in relative lockstep. They were joined at the hip until 2022. That's when the link snapped. Today, new home sales are actually above pre-pandemic levels. Meanwhile, existing home sales are still cratering, sitting more than 20% below those norms. So why the divergence in the real estate market? It's simple. Builders are living in reality, while existing homeowners are living in a fantasy. Builders looked at the high mortgage rate environment and made the tough corporate decision. They slashed prices by 15% and started offering aggressive mortgage rate buydowns to buyers. They realized that to move inventory and restore housing affordability, they had to fix the affordability equation themselves. The average seller can't offer you a 5% interest rate, and they are flat out refusing to cut their asking price. They are waiting for a 2022 home buyer who no longer exists. The fact that new home sales have rebounded proves that buyer demand still exists, but only at the right price. Builders have revealed the true clearing price in today's housing market, and it's significantly lower than where many resale homes are listed. Eventually, this gap must close. Either existing sellers wake up and reduce their home prices to compete with these brand new subsidized builds, or they continue sitting on the market for months, while their home equity evaporates. The data from D.R. Horton doesn't lie. Builders are leading prices downward, and the rest of the real estate market is only a few steps behind, whether sellers realize it yet or not. Thank you for watching this housing market update and real estate forecast. As always, make sure to hit the like and subscribe button if you enjoyed this housing market analysis. And if you're in the market for a new home, let me know what you're seeing on the ground in your local real estate market in the comments below.